Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, and it's May 21st. Hope you guys having a great day so far. We got a lot of data to go over today. Today will be data-packed day for this week. Tomorrow, however, there will be no data to report, so it will be more geopolitical items that will be affecting the markets and corporate earnings reports. So let's jump right into it. We'll start with the initial jobless claims that we get every Thursday. Last week we had the report of 2.69 million people applying for unemployment. Forecast accounted for a dip down to 2.35 million. However, it exceeded that forecast at 2.44 million. However, it is still less than the previous week, so we still have that downward trend, but unfortunately still is a little higher than our forecast. Philly Fed Index for the month of May, and this is an index that gauges the activity level in manufacturing in the Philadelphia region. So obviously, when you see minus, that's contraction and big pullback. And back in April, it's down as much as 56.6. May, with forecast calling for improvement to a minus 40, and not quite to that extent, but minus 43.1. Market manufacturing PMI. So this is anything below 50 is kind of considered a pullback, and right now we see 36.1 for market manufacturing for a month of April, and it came in at about 39.8 in May. So a little bit of improvement. And services also showed improvement from 26.7 to 36.9 in May. So again, looks like April kind of bottomed everything out. We're seeing some improvement, but how long we get back to normal or above lines, it may take some time. So we'll have to kind of wait and see what that transpires, as obviously we're not seeing that big of jumps right now, and things are slowly getting back into the norms. Existing home sales for the month of April. So back in March, we had 5.7 million annualized units for existing home sales. However, forecast was supposed to dip down to 4.2 million, and it dipped to 4.33 million. So better than expectations, but still a pretty steep decline considering that's about 18% drop in existing home sales. So hopefully this will be the bottom, and we'll see this pick up again coming summer here. Leading economic indicators showed some improvement. March it dropped 7.4%. However, in April it dropped only 4.4%. So we'll have to kind of see what we'll see for the month of May for leading economic indicators here. Let's jump ahead to the headline news. Stocks are down this morning. They're kind of taking attention, looking at a bunch of different things from the corporate earnings reports to the data we just talked about, especially the initial jobless claims, which has been a pretty big factor. That's kind of putting us almost about 20% of the workforce on unemployment right now. And then also we got some tensions growing with China, which is obviously not a great thing going on. We had President Trump tweeted out talking about the how upset he is and finds it disgraceful about a lot of the tactics that China is doing, from the disinformation on the coronavirus to their basically smear campaigns against Europe and the U.S. to military buildup and etc. So about that, but also the Senate yesterday, what kind of also started a little bit was the Senate had gone to uh, pass a vote to bar some specific companies or Chinese companies into any U.S. exchanges, stock exchanges. So that also didn't sit well, probably with China as well. Let's see how this is playing on the bond market and the mortgage, and see what mortgages are doing today. Right now we're down about 5 basis points, so we did have a bit of a pullback yesterday. So we kind of almost did unchanged yesterday. So again, we're still in that same range. So the mortgage rates will be unchanged today so far. We haven't seen any price changes. But as you can see, we got the 50-day moving up here. We got the 25 moving down here. We're going to get to a point probably within maybe even as soon as next week that we're going to have to make a choice either going upwards or downwards on there. So we could be squeezed down further. As you can see, we were way up here. We got squeezed down here as this is approaching. So we want to kind of watch this on there. Also, a comment from yesterday. We had the Fed's FOMC notes yesterday that were released, and one thing that they did talk about was the YCC, or the yield curve control. Basically, what that means is that they're going to try to keep like yields in a specific position so they can, which should be able to keep mortgage rates and interest rates in general in a lower position. So we should see rates down for a while, which is obviously good news for those who are looking to buy or refinance. Let's go ahead and take a look here at the yields. Yields are down a little bit. We're seeing rate about 0.67 right now, and again, adding a little less pressure on bonds. So they're just kind of sitting between their 50 and 25-day moving average, just like mortgage-backed securities. All right, that's pretty much the wrap. Mortgage rates are unchanged. If you're located in California looking to buy or refinance, we'd love to hear from you. We have a lot of programs we can help you out with and help you choose the best solution for you and your needs. You can either contact me through direct message via the social media site you're finding us on, or just go ahead and email. Email is probably the quickest way we'll respond. If you guys are ready to go, we do have a link in the description where you can find, you can actually start a loan application. It's a very simple form to get started on. Also, you can upload any documents that you might have want to get started with it. All right, you guys have a great rest of your day. Thanks so much for your time and watching the video, and we'll see you in tomorrow's video. Bye-bye.